Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 4 o'clock in New York on Thursday, the 26th day of February 2015, and this is the daily report for gold and silver. We do have gold trading higher today, but well off the highs. We'll definitely need to touch upon that in a second. Currently, we're trading up about $4.50 on the day, 1208.50 to 1209. Current range, it has had a high of 1220.10 and a low of 1206.60. Silver, which was trading higher throughout the session, is now turned slightly negative, off about a nickel on the day, still above 16, but at 16.52, the low 48, so we are near the lows, the high 16.88. We'll touch upon silver towards the end of the show. We did send out a special trade alert, but that trade alert was for gold only, and we'll touch upon that now. So traders, I first want to go over the trade alert that I did send out last night. Gold was trading roughly at 1210, high around 1213, but the key was that we had broken above this high sitting right here, roughly at 1206, 1207. In fact, the market itself confirmed the Three River Morning Star that we saw unfolding. The one caveat that I did put in to the trade alert was my only concern is if the market will remain trading near the highs, because that was very, very important. In fact, this is the actual screen print that I sent out last night. And if you look at the size of this green candle, it's a defined confirming candle. And the fact that it backed off is absolutely of concern to me right here, because now you can see the difference. We're not trading near the highs. The second thing that I'm looking at, of course, is where it stalled, which is at 1221, which is precisely the 50 and 61% retracement levels. And so that we saw some real support come into the market roughly at around 1200, 1198 in that area. We did have these extreme lows, and we have real support here, but we currently have resistance roughly at 1220, and that's what we're going to need to see the market break through, especially on a closing basis, for me to feel a little bit more comfortable. That being said, my sense is right now, because we did not get the follow through, for those that have taken the trade, we are going to send out a recommendation to actually trail that stop up tighter. I do not want to have the same kind of risk factor that initially I put into the trade, because we did absolutely back off of the highs that we saw last night within the marketplace itself. So with that in mind, my current suggestion in terms of our stop placement, right now, we have suggested that you put your stops below these lows here at 1190. And we're currently trading roughly 1209 in the low 1209 area. If we see any kind of backfilling, in other words, if this market in any way goes under this current low, which is at 1206, I'm not really comfortable with a long side trade, because all I want to make sure we avoid is a scenario like this, in which we had our Three River Morning Star. We had a confirmation, but that confirmation was such a short candle that the following day we saw literally the market break down through the support level and move to the next level lower. So with that in mind, you can either move your stop to 1198, which are covering all of these bodies, meaning the difference between the open and close. It would, of course, not account for these lows right here, which are running roughly 98 to 91. But my sense is if the market begins to drift below the lows of this candle, meaning 1206, any kind of confirming candle that we witness becomes negated. Now, the fact is that this candle is pretty much formed, and they will on a daily candle begin to chart it after the break of the session and when it restarts, of course, in just a little bit. So with that in mind, that is my suggestion. You can raise that stop up at a minimum to just below 1200 and a maximum to just below, call it 1205, 1206 in that area. If you're in at 1210, 1211, your stop is at 1205. You've really limited the risk or downside exposure significantly. And that would be my suggestion. And as I said, the reason being is that we obviously did not see gold have the ability to sustain those higher prices. We, in fact, saw it stall at a resistance area, and I really wanted to see a close that was more effective than what we've seen here, and trading in New York to really carry over what we saw in the European markets last night. So in the other markets that we follow, we did have the Dow Jones Industrial Average close slightly off on the day. As you can see, Standard & Poor's, this is our weekly chart, and we close at the highs or near the highs, slightly higher on the day. Dollar, looking at this weekly chart, you can see we've had this surge in the dollar back up at 95.35. Obviously, that curtailing any kind of upside movement that we saw in gold. I think this being the biggest nemesis right now. You can see on this weekly chart a tremendous move to the upside. And lastly, we had a fairly sizable decline in oil. Most importantly, that oil has broken back below $50 per barrel in terms of crude oil, currently at $48.91. So trader silver, currently trading, as I said, above 16, but at 16.53, you can see that it's in essence now unchanged to down about a tick, this being our daily chart. It is still trading, but we're getting near the break of the day. And we did not put out any recommendation in silver. I'm still sidelined in silver. We are long gold. We are recommending that we trail our stops up higher in gold to curtail any kind of risk factor. Market currently trading roughly at 1210. Our entry price I'm marking at 1211. Stop from 1190. You can move it either to 1198 or to 1204, 1205. This has been Gary Wagner wishing you as always good trading. We'll talk to you tomorrow on Friday for the weekly wrap-up. Have a great day. Bye-bye.